Clock strikes 6. Greetings, August 31st, our second Wednesday. Hope you guys enjoyed and learned a lot on Saturday. We covered a lot of ground, a lot of territory. And again, I have been impressed with your efforts and your successes, and hopefully they will continue onward and upward. So I'm going to start by opening the floor to questions. If you have questions, anything you want to talk about, that's the starting point, is your questions. Anything on your mind?
Dr. Scott, I do have a few questions for you. Can you elaborate more on both of the projects in terms of like how we're supposed to like kick it off and what you're expecting from each?
Okay, we'll have a conversation about that. Sounds good. All right. I'm just getting the agenda right now. I just want to get the questions on the table. Anything else come to mind?
For me personally, I'm sorry for everyone, but for the quizzes themselves, I haven't taken it yet, but I was just wondering, are we able to toggle back and forth between questions, or is it locked where we have to answer before we proceed? Or
great question. I'm pretty sure you're on a time crunch, and once that time runs out, you're done. I believe you can go back and forth on questions, and someone might be able to go ahead.
Yeah, you are able to go back on the questions.
Yeah.
Okay.
Yeah, but while doing it, I would say just keep saving your answers while you go. So if the time limit is off, at least whatever you have saved gets submitted.
Okay, smooth.
That brings up another point. I'll talk about the homework in a second. Okay, so quizzes, we'll repeat. Thank you very much for the input on that. Because yeah, you're not stuck once you give an answer and then go to a different question. You should be able, and you obviously can go back to questions. It's just when you run out of time, you're out of time. So you really do need to know the material. It's not something that, even if there are some workarounds trying to say, okay, my screen's frozen, but maybe I can find another way to get answers. You don't really have the time or the luxury on the quizzes or tests to really take that time to do any kind of outside research, even if you try. The quizzes, you also don't want to, take a dinner break. When the quizzes start, the clock starts ticking and it keeps going. So you do need to finish at that time. So plan on a good sitting. Typically, the quizzes are 5 to 10 questions. I used to do 4-question quizzes, but the downside is one wrong, you got a C. And I want to give you the benefit of the doubt. If you get 1 or 2 wrong and you still got a B, you're good to go. So that's probably a little more comforting, a little more effort, a little more content, but it is, I think, a little bit on the grading side. You're not going to be penalized. You won't find true and false 98% of the time from me. I don't like true and false personally because it's too easy to miss a word, and we're not trying to catch you. We're trying to help you understand the concepts and make sure you understand where you're coming from. Let me go back to the projects. Jesse, you brought up a good question. The assignment of getting annual reports. We're actually going to use some of those annual reports in some of these Wednesday night calls. We'll talk about them, but I want you to have a hard copy in hand. That's not what you need for the annual report review. We're going to go in like we did on Saturday for Edgar. You're going to go in and look at a couple of 10Ks. You're going to do financial analysis. And ultimately, you're going to answer the question, would I invest in this company? The question being, all right, let's look at the numbers. If you examine the company and they have some trends that aren't so good, you might say, not a good direction. If you look at some of the ratios and say, not real strong. They have weaknesses here, weaknesses there. And by the time you actually do those, which is due by the end of the course, you should have a pretty good handle on this ratio analysis. 3 kinds of analysis. There's horizontal or trend analysis. So how did we do last year, the year before compared to now? And you'll be analyzing some numbers. There's vertical or common size. The Walmart question is a vertical analysis. Oh, so 2.4% is the bottom line of Walmart net income percentage. So it was 4.8 cents on a $2 gallon of milk. That's vertical analysis. You do vertical analysis on gross profit. on net profit, maybe SG&A. You do a vertical analysis, how much inventory do we have as a percentage of balance sheet? How much of receivables? What's our debt to asset ratio? And we'll talk about all these ratios as we get down the pipe. But this is the analysis you'll be doing based on actual numbers for an actual company that you get to choose. And chances are it's not one that you have a hard copy for. We're just going to use the hard copy for reference. We're going to pull it out. We'll dissect some numbers. And again, it'll be used to reinforce the concepts that we learn. The other thing I did want to talk about the homework and emphasize is that the homework does expire on the date due. There is no resource built into my business course. And I wish they did, actually. Some of the other programs I've had. All right, so you get penalized, you know, a point a day, a letter grade a day or a week, whatever it might be. There's no facility to give you an extra due date, but there is for an extension. So if you're in a situation where, you know, family emergency, the dog, the cat, their family too. If something happens and you need 48 hours more, let's talk. Let's have that conversation. I can make changes. I have no qualms. As you can tell by now, you can see I'm fairly flexible on things like that because I want you to succeed. My job is to help you learn. And if you got cut off and now I got a 0 for the assignment, there's no incentive to finish it now. That's not where we're at. The goal is to learn. The goal is to understand. The goal is to apply. So that's what we're talking about leading into the final project, is getting down these concepts, getting down the terminology, and understanding when you read through the statements and make sense. So it is due on the date. So that's the comment I wanted to get on the homework. I don't think I mentioned that on Saturday, but I think I did mention it afterwards. I did post a discussion about that. So anything else on your mind?
I had a quick question about the quizzes. So I know you said that there was going to be no true false, and then you said about 5 to 10. Is it set up similar to like the homework? How, you know, there's like separate parts, or I know obviously I'm not asking what's on it, but you know what I'm saying? Like, is that how it's similar to, or just
the content is similar? It's, I mean, as I say, mostly multiple choice. There might be some fill in the blanks, there might be some other types of answers, but most will be multiple choice. So your homework obviously is not multiple choice, but your homework does come up with answers. And those are the kind of answers you're going to have to find in the multiple choice question. The content, yes, will be very similar. If you see it in my lecture, if you see it in the readings, if you see it on the homework, and I'm not going to say I cover everything in a lecture. I'm not going to say the homework covers everything that might be on a quiz. 90+% will be, but there'll be some things that show up on a PowerPoint, that show up on an assignment and a homework, that'll show up on a quiz. And those are the kind of things that you do want to know and be comfortable with and understand when you take the quiz. I think there's only, I posted the quiz average already so far. And the majority of folks that took the quiz got 100. And frankly, I think it was 7 people take 5 or 7 took it so far. Actually, I think there were 300s out of the 5 that took it, something like that. But also to be expected, if you're taking it early, chances are you are going to be in good shape because you know the stuff and you're confident enough to take it early. I will post every week I'll post the results of the previous week's quiz, so everybody knows where they're at. Homework, most are doing pretty well. There were 2 or 3 in this last week that I'm concerned about what I saw in the homework. As far as, and you know your grades as well as I do. I get to see them and you get to see them. And if you're having some challenges, reach out. I've already had a student reach out saying, where can I get some help? And I'm saying, well, if you need help, yep, I'm a resource. I'm here to help. I'm going to mention somebody else called Ben and Boz tonight. That is another resource. All those other lectures besides mine are available to you as a resource. And if accounting is really baffling, we have a success center, CASA Center, CASA, that can help. They do have tutors, mostly for undergraduate, but I'll tell you the accounting content that you're seeing at this stage is not too, I mean, we're going a lot faster. You're going to see a financial and a managerial class combined into one, which we stretch into 2 semesters. You're seeing it in one because you're good. But the ability to understand what we're doing, yes, it's a faster pace, but the content, accounting is accounting. Financial statements are financial statements. The terminology is the terminology. So that is the stuff that you can, will, and should understand as we go. Does that make sense?
Yeah, sorry. I was trying to get I like to picture kind of, obviously I know you're not going to be like, this question will be on there, but just like some sort of,
If you look at the PowerPoint, you can pretty much tell what kind of questions are going to be on there, frankly. And that's why and we talked, I remember the first night, start reading the PowerPoint, even if you don't know the terms, end with a PowerPoint, have some lectures in between, have some readings, have some homework. That's gonna best prep you for content. But yes, you're gonna have to integrate it. Yes, you're gonna have to understand it. Yes, you're gonna have to be able to apply it. Okay. Other questions coming to mind?
Dr. Scott, one last question for me. I know I asked you last week about the chapter that's going to be for the exams. Were you able to draft that up yet?
One more time.
I asked you last week about which chapters would be corresponding with each exam.
No, I have not batched the chapters for the exams. Keep me honest, I will do that for next week.
Okay.
But I think the first 4 or 5 chapters are exam 1. But we're doing it hopefully a module is the term they use, just like a chapter. We do a module a week. So the first exam will accumulate 4 to 5 of these modules. So we still have some time. But the exams will be separate, batch of modules, batch of modules, batch of modules. But the final exam is cumulative. So it'll be all modules pulled together. So I want to make sure you're not doing a mind dump saying, got past this, I don't have to worry now. Yeah, you still get to worry.
I have a follow-up question to that, if that's okay.
Please do.
By
By the way, just so you haven't used up your quota, you can still ask more questions.
Do you have any idea around when the first exam will be?
Yeah, it'll be in about 3 to 4 weeks. So, and again, it'll be after we cover the first 4 to 5 modules, and then the exam will take place. And then you'll have a week to do that. A little more time. And it'll be a little bit longer as far as it'll still be timed exam, but you'll have a little longer, and it'll be full blown respondus. So you get to, and if anybody really would rather take the exam on campus rather than do respondus, I'm available on campus too. I can meet on campus and we can do exams if some of you aren't comfortable with respondus for any reason.
What do you mean by full blown respondus?
The respondus you have now is it locks out your computer from going anywhere else. Full blown respondus is actually a video. It takes pictures periodically. It actually highlights, and I'm doing it for exams only, but it'll highlight and say, oh, your eyes wandered, you looked away. You know how the Apple iPads are. They follow your eyes, they follow your head, they follow the camera will move with you. Well, respondus does that too. So it highlights, for me, it says, oh, you know what? So-and-so is looking over to the side a lot. And that means you might have some other papers that shouldn't have been there. And then there's a 360 view. How many of you have actually used the full respondus with the video? It's a full, it's basically show me the environment, show me the picture where you're at. Let's and I'm not going to make you flash your ID because we know who you are. But it will be video recorded periodically, snapshots. It's more complete in terms of, but for the quizzes, I'm not as concerned.
Okay.
So does that answer the question?
Yeah, it does. I just didn't know what you meant by what I'm saying, the full respondus.
Yeah. So quizzes are not quote unquote full respondus right now. Okay. It's not video.
So are you saying pretty much for the exams, and I'm sorry if you already answered this question, we're not permitted to have any scratch sheet for
you can have
calculation?
You can have blank scratch paper. Okay. You can have a calculator, but any notes, anything, yeah, you're prohibited.
And I'm sorry. Only reason I asked is because in previous semesters, like you said, if your eyes toggle outside of the window, it will flag. So I didn't know if it would kick us out of the exam or.
It'll flag it. So when I review it, we may have a conversation. If there's a lot going on, and you can say, you're an MBA. I'm not here to, I don't have to get to the point of, well, there needs to be some trust. On the other hand, I don't want to be taken advantage of either, and you don't need to. I did have a question on the weekend about formulas. So most of the formulas, yes, you will need to memorize. There's not going to be a crib sheet or a cheat sheet that says, oh, return on assets. Return or net income over average assets. Let me look that up. Or receivables turnover, inventory turnover. Most of the ratios are self-explanatory. Earnings per share, earnings over shares. Return on equity, return over equity, average equity. If you're looking at working capital or current ratio, these are things you should know without having to look them up. I expect you to have that in your mind, not on a piece of paper that you have to read and check formulas. So yes, there will be some memorization, whether it's flashcards, whether it's review, whatever it takes. We're going to be practicing a lot with these ratios and with these numbers and the interpretation, understanding what they mean. So, but I expect you to internalize those, know those, understand those. Good questions. Other things on your mind. So the homework for module 1 is done, and the quiz is due tomorrow night. And I'm actually glad we're instead of Tuesday making it Thursday, so I can answer more questions if things are on your mind that you want to talk about that are still on the quiz, even though hopefully you're not doing the quiz right now. Actually, respondents wouldn't let you be in Zoom and on the quiz anyways. So, too bad too. Anything else you want to talk about? I'm going to jump into module 2 for a little bit, and we can talk some more, or I could jump over to Edgar, but you getting some practice on Edgar.
I'm sorry if someone already asked this before I got here. Do you make the quizzes, or are they pulled like from the textbook?
I make the quizzes, but I draw from a test bank.
Okay.
So I'm pulling questions that are out of the modules, or that I think are appropriate. Yeah, I choose the questions, obviously.
So the format's very similar then to
Yeah.
the homework.
Yeah, they're multiple choice in format, even though the homework normally is not multiple choice because you actually have to calculate answers pretty much for many of the homework problems. But the content, yes, is identical to matches the modules themselves and the PowerPoints and the lectures and any of the other communications and resources you have. All right, I'm going to put in the chat one of the other tools that you actually will probably find useful. And I'll just demonstrate it briefly too, because I want to make sure you have access to it. It's called Ben and Boz. I mean, there are a bunch of resources in the syllabus. There are resources on the discussion points, but Ben and Boz tool is another faculty, a pair of faculty members. And they actually have a really good series of Excel tutorials. And they have a series of narrated PowerPoints that are very good for financial accounting. This is also on the syllabus, Ben and Boz, it's just BENANDBOZ, Ben and Boz. And I will demonstrate it here. I'm going to go into it and just do a quick walkthrough of, and I'll share my screen. With a share screen, sound. So when you go into benandboz.com, you'll see that you've got a couple of options at the top. There's home, there's lessons, there's about. If you go over to lessons, there's Excel tutorials, a series of Excel tutorials, which actually match financial accounting concepts too. So there's actually, if you're not comfortable with Excel, this is actually a pretty good resource for like 15-minute opportunities to share. And then there's something called narrated PowerPoints. And each of these, they have separate lessons. I think there's 12 or 13. Let's see. there's 12 lessons. These match financial accounting. They don't necessarily match our modules perfectly, but if you go into, say, lesson 1, it is a tool. Here's shareholders and creditors. They're talking about provide resources. This is just an introduction to financial accounting. Again, it doesn't perfectly match what we do, but some good background stuff. And it just talks. And this is a 24
Hey
minute.
everybody, good day. This is Ben and Boz, and this is the first installment in our video series trying to explain financial accounting. I'm Boz.
I'm Ben.
And we've been thinking about this one for a long time. We're excited to finally roll this out.
I'll just jump.
How'd you get the information
I
for
could
that?
be making it up.
You could just be making it up, honestly. And
Yeah.
They narrate their own
The
PowerPoints.
rules are called GAAP, generally
and they
accepted
have some
accounting
rules.
principles.
They talk about
And then the
GAAP,
external
they talk
users
about
who are usually going to use financial
statements.
accounting information.
This
are
is
gonna be
all
shareholders and
background
creditors.
stuff.
And just kind of a big thing is this is not the only type
Undergraduate
of accounting
level,
and
but that,
accounting out there.
again,
There's lots
not to
of
say
different types of
that
accounting,
it's not a
managerial
bad
accounting, tax
foundation.
accounting, but this is financial.
Some of you have never really had an
and this is GAAP
undergraduate
too. There are all
program.
different standards. Like there's international financial reporting
Some
standards.
of you already have a
we're going
business
to be focusing
degree.
on GAAP in these
This may
lessons.
be more review.
Shareholders and creditors, those are the two main
But
people. who
again,
use
this is the kind of
financial
stuff that might just another resource, another tool in your toolbox to jump in and to experience and experiment with. So, and again, if you have questions, if you want to go one-on-one, just pop my Calendly link, go ahead and schedule a time. It's in my syllabus, but I'll also put it here. So you have it. You can schedule a time, 15-minute, 30-minute, an hour. I have different time frames, Zoom sessions that you're welcome to take advantage of. So please do some outreach. You don't have to wait till Wednesdays if you have questions. I do try to respond to emails pretty quickly as well. Email is even better than phone or text if you're trying to get a hold. So that's where we're headed, and that's where we're going. Other tools, other resources. One other thing I will mention is that in our, let's see, if you look at the course that we have, courses. So in our 700 course, I'm going to share the screen as well. You've seen this before. So on the left tab, if you scroll down, I do have all the PowerPoints full set right down here at the bottom. So having access to those, it even includes some modules that are not in your textbook. To get the price of the textbook down, I eliminated a number of modules that we really didn't need in a single semester course, but they are there in the PowerPoints if you want to explore. These are the same PowerPoints, though, that are matched to each homework set. So here's all the PowerPoints that go with the assignments, module 1, module 2, module 3. And if you go back to our module 1, it's the same PowerPoint. You'll see here suggested PowerPoint, and then videos and lectures, the homework, and then optional resources. And under optional resources, there's a whole bunch of stuff. Again, I'm not trying to make it that you have 15 hours of work a week to cover. You shouldn't have to do that. But if you want to reinforce some of the concepts, some of the things aren't clear, if my video isn't clear enough for you, we've got a series of other support tools that can help and make a difference, hopefully. Other comments or questions?
For module 2, would you mind going over an example of like the relationship between all of the financial statements as it's broken down like in the homework and the lessons?
Yeah. Do you want to try doing a specific exercise? Because if you have a problem or exercise from the book too, I have no problem doing that. I actually like that. If you said, you know what, I'm working on the third problem in the homework. Can we do an example? I do it algorithmically, so you'll end up with different numbers in your homework anyways. But if you want to go through a specific example of a homework, we can do that as well. Why don't we take a look at that right now? I'm going to go into module 2. One of you has done it, has finished it, got 100%. Most of you have yet to do it, and that's okay. But if I go into module 2 homework,
So the way it's set up is actually not with numbers. It's just a series of scenarios, and it's asking pretty much the impact from balance sheet, income statement,
Yep.
So on and so forth.
So let's take a look at what we're exactly talking about. Okay, so there are 13 questions in homework 2. Any particular question you want to do a deeper dive on?
Yeah, I'm not sure which question it is because I'm pretty sure it's scrambled throughout. But if you scroll down, it's like A through H and A through G, I believe, for the question that I'm asking about.
Let's go through question 2, because it will be A through H. Here we go. Just like this.
Yeah, similar to that right there.
Okay, there we go. All right, so linkages to understand transactions. Independent transactions, we started getting into that because there was a question on Saturday to, actually, nope, that was a different class I was teaching, I'm sorry. Okay, so here's A. What is the effect of a transaction? Company issues common stock in exchange for cash and PP&E. Okay, so what's it asking here? Complete the table below to explain the effects of financial statement linkages. Refer to exhibit 2.1 as a guide for linkages. Okay, so if we're looking for 1 is an increase, 2 is a decrease, everything else is blank. So let's look at scenario A. Scenario A is asking the question, we issue common stock in exchange for cash and PP&E. So where are those things, 3 things found? Balance sheet or income statement? We'll start. Best place to start would be the balance sheet. So if we're looking at common stock, how is that going to influence our balance sheet? And let me give you a sample scenario. I'm going to add a whiteboard to this. And well, I'm going to add it to this. So I'm going to say, let's say we have 10K in cash. Get 20,000 in equipment for a total of 30,000 investment in common stock. So forget the 1, 2 plus minus right now. Just asking the question. What is happening here with our cash?
Our cash is going up,
And by how much?
10.
10K. Good start. All that. Okay. Now, where's the 20K go on the balance sheet?
Non-cash assets.
You got that right. Okay, so property, plant, and equipment, 20K. And now, scroll down a little bit here. Actually, no, it's gonna stay. Where's the 30K go? What category in the balance sheet?
Contributed capital.
Better, you're right about that. Okay. So are these increases or decreases? Go ahead, administration numbers and put the numbers in, fill in the blanks that we're supposed to fill in. So are we increasing or decreasing cash?
Increasing.
Increase cash. Are we increasing or decreasing non-cash assets? Equipment.
We're increasing.
Increasing. And we said contributed capital increase. All right. So now we get the balance sheet covered. Let's go down to cash flow. Are these transactions, are any of these transactions considered operating cash flow?
Investing, so the equipment, then you put 20K.
You put 20K of equipment. Is that a positive or a negative?
That'd be a negative if you're putting 20K in.
Yep, that is a use of cash. Okay.
And then in the cash of the 10K, you injected 10K, so that's a 1 then, wouldn't it be?
Yep. We actually injected 30K.
30.
But you are correct. So we've got positive and negative. Do we have any effect on the income statement? Any revenues or expenses generated? Buy equipment is an expense.
Well, your equipment is 20K.
Is that considered an expense or is that considered an asset?
Well, you bought the equipment, so that could be an asset.
It's going to be an asset. We will eventually depreciate it. We'll move that asset down. That'll come down into our income statement as depreciation expense. But the same way on Saturday, when we look at our selling of inventory shows up where? Well, it shows up in the balance sheet. When we sell the inventory is when we move up from the balance sheet to the cost of goods sold expense on the income statement. But until then, it's showing up only on the balance sheet. All right, so contributed capital. Did equity, common stock go up or down?
It went up because you sold it.
Good, well, we contributed $30,000 worth of stock. So that, yep, we increased 30,000. We sold 30 grand worth of stock. And our retained earnings, let's see, what's the formula for retained earnings? We start with our beginning retained earnings. Earnings, we add net income, subtract dividends. And we have stock repurchase. We didn't do any stock repurchase. And we have ending retained earnings. So did our retained earnings change at all based on these transactions?
So beginning retained net income.
Beginning starts at 0.
Yeah.
Do we have any revenues or expenses to affect negative net income?
Well, yeah, you bought equipment, didn't you?
But that doesn't show up in the income statement, right?
True, fact, okay.
We don't have any revenues. We didn't sell anything. And we don't have any expenses. We didn't have any payroll expense, utility expense, cost of goods sold expense. None of those expenses yet. So we gotta be careful. We're differentiating between the balance sheet, income statement, statement of cash flows, statement of stockholders' equity. Balance sheet, initial investment affects that stuff. So now let's go back and let's take a look at number 2.
Now, after the stock purchase, is that an equal symbol for end of retained earnings?
After the stock purchase, say again.
Is that
Oh,
should
yeah.
be an equal symbol? Okay.
Oh, right there, yeah, you want to put equals there. I have no
Gotcha.
problems on that. Okay. But yeah, and then double, yeah, that's that plus minus equals ending retained earnings. Thank you.
Got it.
Yeah. Okay, let's clear drawings. All right, so now we're going to go through what happens on B. We paid cash for rent of office furnishing and facilities. Okay. So what happens to our balance sheet? What gets affected on the balance sheet?
Well, you spent money, so cash wouldn't it be?
Cash is a good start. So
So
we
two.
paid cash. We don't have a liability, payables, a liability. Cash up or down?
Down.
Cash is down. And do we record any assets? Let's see, paid cash for rent of office furnishing and facility, rent our rent. So where's that rent going to show up?
Wouldn't that be in the statement of cash flows as an investment?
Expenses.
It will start with expenses. All right. And did we increase our expenses or decrease our expenses?
You increase because you're renting.
Yep, we're increasing our expenses. So we'll put an increase there. And then what happens?
Question.
Well, do we have any revenue yet?
No.
So
Why
what happens
would,
to net income?
I have a question, Dr. Scott.
Go ahead.
Since we are paying rent as an expense, wouldn't it be a current liability?
Well, if we owed the money. So in other words, if you say, hi, let me sign the lease today. And you said, I owe you $1,000 for rent today. The problem says we paid cash. We paid $1,000 in cash. We don't owe any more money right now until next month.
Okay.
So you are right. We will owe the money and we probably record it and then a week later pay it. And yeah, that's when we create the payable. But right now, we're just writing the check. If we're writing the check, cash is going out the door. Expenses being recorded. And all these transactions, there's two sides of every one of these transactions.
Okay.
All right. So if we go back and look, I'm going to come back up here because we're going to be changing. I cannot have a one-sided entry. I can't have cash going down and nothing else happening on my balance sheet, by the way.
Mm-hmm.
But we'll see that in a minute. So let me go back down to the income statement. If I have expenses going up and I have no revenue, what happens to my net income?
It's going down.
Going down, decreasing. If my net income, or we'll call that a net loss, what happened to my retained earnings at this point?
Is it not going down as well?
It better go down, exactly. And by the way, a good check on the balance sheet is to say, oh yeah, if my assets goes down, then my liabilities or equity also have to go down. That's our check. That's our eyeballing and saying, I can't have an asset go up and my liability go down because now my balance sheet, my equation is out of balance. I'm no longer asset equal liability plus equity. If assets go up, liabilities or equity has to go up, or another asset has to go down. Those are the choices. Okay. So now let's go back to cash flow. What kind of cash flow is rent? Is it an operating, investing, or a financing?
Maybe operating.
Operating.
Thing.
Better be operating. That's our main business. And so if we buy inventory or we borrow money, we get accounts payable. If we go out and sell stuff, if we do advertising, we have wage expense. If we pay rent or pay utilities, all of that stuff is all related to operating cash flow. Is that a negative effect or a positive effect on cash flow?
Isn't it a positive because it takes money to make money?
Did we get money in? Did somebody pay us rent? Did our cash go up or down is the question.
Well, the cash went down.
Cash went down, so it is a cash outflow. It is a use of cash.
Okay.
So we better put a 2 in the box. Did we have investing? Do we have financing at this point?
No.
Now, if we bought a building, yeah, now we would have investing. If we bought equipment, we'd have investing, but we're still in operations.
So if I don't physically own whatever it is, then I'm not investing then. If I'm renting, it's not an investment. It's still operating then.
If you are renting, is it rent expense? It's considered operating. That is correct.
Okay.
Now let's go down the statement. Did contributed capital change here?
No, no one gave you nothing. You didn't put anything else in. Well,
How about our retained earnings?
no.
Decrease.
Well, no,
Yeah,
that the retained
up
earnings
here.
decreased. Yeah, so it did go down.
Because we had expenses recorded. So we're gonna have retained earnings popped on there. So we're making the big picture here, and we're seeing all 4 statements interacting accordingly as we progress. Okay. So now we perform services and we receive cash immediately. Is this going to affect our receivables or affect our cash?
Cash.
Cash. If we billed it and didn't get a check, it would be receivables. It would be a non-cash asset. But in this case, we got cash. So let's go right on down here. Did cash go up or down?
Went up.
Got cash. Thank you. Sold some stuff. What's the other side of this transaction? Well, let's go look at our income statement. What else was it?
Revenue went up.
Revenue went up. Is that a 1 or a 2?
Well, one.
What happened to our net income?
It went, well, didn't it break you or it went up? I guess, yeah, from being down.
Went up. We already took care of the rent expense before. Right now, just from the sale of services, not products, of services, we're up. Okay. So I go back up here, I say, well, if my revenue went up, my net income went up, what other change happened to my balance sheet?
More retained earnings.
Up or down?
Increase.
You bet. Okay, it had to go up. Why? Because our net income rose just from that sale. Whatever we sold went straight to the bottom line. And our balance sheet's in balance. Our assets went up and our equity went up. We stayed in balance. Now, is that considered operating, investing, or financing? Or if we have sales?
Operating.
Operating.
Operation. Good choice. So there we are. So we went up on that or down?
Oh,
Up. And we got retained earnings down here. The same thing in retained earnings on the equity statement. Better be the same as retained earnings on the balance sheet. So let's go down just to D. We performed service for clients and sent a bill. So this time we didn't get cash.
so that's a net 60. Wouldn't that be a liability then?
We performed services for the client. We sent them a bill and they need to pay us within 60 days.
Accounts
We're
receivable.
paying someone else in 60 days. So that's a good question. Is that a receivable or a payable?
That's a receivable.
It's a receivable.
It's a receivable. It's an asset. Somebody owes us money. We will turn that into cash when they pay us. But right now, that is, we sent the bill, we're doing business, and we've earned some money here. Okay. So when we look at this might get a little confusing. So let's see, did cash change?
Not yet.
Non-cash assets?
Yes.
Yes.
Increase.
Increase. Okay, good
But
choice.
I have a question, Dr. Dell.
Yeah.
So with a net 60, you bought something from whoever manufacturer.
Someone
and-
bought from you.
Or they bought from us. Excuse me. They bought from us from whoever I sold it to. They have a net 60. If they don't pay, now how is that going to be a non-cash asset if I just gave equipment out? Is that not a liability by then?
Well, it's not liability, but you might end up writing off the asset. So let's finish this transaction and I'll answer that question. That's a great question. Well, let's look at the big picture and then we'll analyze it and we'll do a deeper dive if we don't get paid. I love that question. So, but let's start with our non-cash assets are up. What happened on the income statement?
Revenues increased.
Yeah, we didn't get any cash, but we do have revenue. We earned some money. It's like your lawyer sending you a bill saying, you know what? I did some work for you. I did in the corporation, or I did some legal, whatever. Here's a bill for $5,000. You owe me $5,000 in the next 60 days. Oh, okay. Well, the lawyer says I got $5,000 in revenue. What happened to net income based on that $5,000 in revenue?
It went up.
It went up. What happened to my retained earnings based on that $5,000 in revenue?
Went up.
Went up. Now, I did not get cash, but this is a negative. I gave my customer a loan. I gave that customer, I said, you know what, customer, you don't have to pay me cash today. Pay me cash in the next 60 days. So I'm giving you the loan that says, well, you know what? I think that the cash that we have here, we're in a situation where second, I'm cleaning this out. Okay. So I lost it, I'm sorry. I'm in a situation where, and I'm gonna pop the results here in a minute. That'll show you where the answers are. But when you're looking at this, you're saying, okay, I have an effect on cash flow. I'm gonna pop the check right here. See this. Oops. So if we're looking down here on D, no cash received. So there's no cash flow affected here. And I haven't got to E, F, and G yet. But there is increase in my non-cash assets, increase in retained earnings because I had increase in net income. And my retained earnings better match. I needed to match that one net there should have been the one down here. So I'm going through and looking at this saying, okay, I'm doing pretty well. I got my increases here. We screwed up. I screwed up. The actual investment over here, did we say our cash flow increase or decrease? Okay. We're going here. We're looking at. Go back and check. No effect. Why? Actually, I got a question on that. All right. So we have cash, property, and equipment. We did have equipment that should be investing, but all of it went into finance. That's okay. When you do a cash flow statement, it will take an effect. We'll talk about that later. But okay, so we're looking at this and saying, this is what's happening on these transactions. They're affecting all our statements. Our balance sheet gets affected, our income statement, that's probably the way to look at it. And then jump over to cash flow statement and always make sure your retained earnings is going to be a match. The contributed capital is going to be a match, whatever it is. This is how the statements are integrated. Does that make sense? Are we on the same page? So I'm going to say company compensated an employee with cash as salary. So what happened? Cash goes down, expenses go up, which means net income goes down. We wrote a check. We wrote a payroll check. What's going to happen on that payroll check? It's going to have a negative effect on retained earnings. So our retained earnings, our equity goes down, our cash went down. Let's answer you had a really good question though, saying, what happens if they don't pay their bill? Say the attorney bills $5,000. So we are looking at column D and we're saying we got zero cash, but we did get a non-cash asset called receivables. Again, it's not a payable because we don't owe the customer money. The vendor money. The vendor owes us money. They're our customers. They are going to write the check within 60 days, the $5,000 to pay the attorney. If they don't, the attorney can go sue them and say, you owe me $5,000, pay up. Let's go to small claims court. Let's go out and do what we need to do. Or I'm not going to do any more work for you until you pay me. But the point is, you're looking here, that's never a payable from the seller's perspective. It's always a receivable. You may end up writing it off. Maybe the customer goes bankrupt, files Chapter 11 or Chapter 13 bankruptcy. Maybe the customer moves out of town and you can't find them. So that receivable may go down to zero and I have to write it off on my income statement because I recorded revenue of $5,000. Now I'm saying, you know what? I'm never going to see that $5,000. They skipped town. So I'm going to have a write-off. My revenues are going to be reduced by $5,000. My net income is going to be reduced by $5,000, and my retained earnings is going to be reduced by $5,000, as is my receivables, which is going to go from $5,000 to zero. It's only a payable in the customer's eyes. They owe us $5,000. It's their payable is our receivable. Are we on the same page with it? Are we making sense?
Yeah, it's fine.
Okay. Company received cash as partial payment of the receivable. So what happens? The receivable goes down and the cash goes up. That's just a change of assets. Has nothing to do with revenue, has nothing to do with expenses. It's just a change of the non-cash asset is down and the cash asset is up when they pay. And if the cash asset is up, if they pay their bill, that's a positive cash flow from operations, paying off the receivables from operations. But there's no effect on net income at that point. I already recorded the receivable and the revenue. $5,000 is already recorded in column D. I got the revenue here, put it in a receivable, and I got the net income here. Once they just pay me the money, that's all they're doing is reducing the receivable, not enhancing the income statement in any way.
So I'd like to put things in the real world, and I'm in the process of changing windows out in the house. So when I go to Home Depot and I agree to purchase $10,000 in windows, they tell me it's interest free for a period of time.
Sure.
I agree. I sign up for it. I put the 10 grand in the Home Depot card, 0 interest. They already annotated the sale, and that's what's happening. And pretty much every month I'm paying them for the year interest free.
Yep.
Okay.
So there's no interest expense or interest revenue generated. You don't have the expense, they don't have the revenue, but they have the sale, they recorded $10,000 sale.
So they
Their
record.
sale was recorded right away as revenue, and the receivable was recorded right away as receivable.
So as long as I pay this off, they'll just keep adjusting, but there is no true revenue because they've already got the revenue from initial
They
sale.
recorded, you can't double count the 10,000.
Okay.
So you record the 10,000, you say, great, pay me $1,000 a month, say it was 10 months, same as cash or something, $1,000 a month.
Okay.
By the way, the catch on those is if you miss one payment, they accumulate all the interest and you're stuck. You can't, you have no recourse. So make sure your payments are current and you're meeting the terms, and otherwise they're going to charge you interest back from day one. But that's a different story. But you're right. You've got the receivable and you've got the revenue. You're done. From that perspective, they're done saying, I recognize 10,000 revenue. You got the windows. My inventory went out the door. My cost of goods sold, $8,000 worth of windows went out, for $10,000 in sales. That's all recorded the time you buy the windows. And then forevermore, your receivable keeps going down, their receivable keeps going down and their cash keeps going up. Just a trade-off until it's all paid off.
Okay.
Good example. Thank you for asking, and thank you for sharing. I hope you enjoy your new windows. All right. And then cash dividends. Again, that's straight out of retained earnings. And dividends are financing, our financing adjustment. So cash is down. Retained earnings is down because plus net income minus dividends. And here we go. Financing, dividends out the door. Retained earnings better match whatever the balance sheet says. So that's actually, that was a good example to walk through and see how it affects all of these statements. And we didn't fill in anything for EF and G, which is why we're seeing the X's there. So, but I encourage you when you're doing the homework, and that's why I say homework might be due, next week. If you can get a jump on things, and let's talk about it, so that if you go through this saying, yeah, this A through G stuff was kind of confusing, how does it affect all the statements? Then we go that way. So please come with questions. And frankly, even on a weekend, if you have some questions and you want to chat, let me know. And I can try to review some stuff with you and say, if you're not really understanding it, based on the due diligence of videos, homework, tools, readings, whatever else you have at your disposal, it's still confusing, get a hold of me. I'm not shy on weekends either.
Hey, Dr. Sharp, quick question on that. So this may sound like a dumb question, but does cash and retained earnings have like a direct correlation? When one goes up, the other goes up. When one decreases, the other decreases as well? Or is that not always the case?
The latter of the two. Because just because you got cash doesn't mean it's a sale. What do you mean? I don't want to get cash. Isn't that how that's what happens? I get a sale, I get cash. Well, just because someone gives you cash, it may be an advance. Maybe you paid $5,000 down on those $10,000 worth of windows and you didn't get any windows yet. You put a deposit down. Hold on to my money. I'm going to get the other $5,000 in a month or a week or whenever. That's not a sale. They're holding on to $5,000 of your money, and they have unearned revenue as a liability on the other side of the balance sheet. So their assets went up $5,000. Their liabilities went up $5,000. Until you get those windows, that unearned revenue is not going to be earned revenue. So cash and retained earnings don't have the relationship, because we've been through this before, and I'll mention it again. When you look at the actual formula for retained earnings, you start with beginning retained earnings, add net income, you subtract dividends, and you end up with ending retained earnings. Just because you had cash come in the door doesn't mean it's revenue. If it is revenue, there's a correlation. Your retained earnings is going up. If your cash going out the door is an expense, your retained earnings is going down. But just because you write a check does not mean cash, it means cash is going down, but it doesn't mean you're incurring expense. It could mean that you are incurring an adjustment to your payables or your receivables. So you might be affecting a liability like accounts payable. So if I owe $10,000 to somebody, to my attorney, and they have a receivable for 10 grand and I have a payable for 10 grand, when I recorded that 10 grand in liabilities, that's when I recorded the expense. I incurred $10,000 worth of services from my lawyer. As I pay them off over the next 10 months at $1,000 a month, they're going to reduce the payable. The payable is going to come down, and the cash is going up. I'm sorry, the receivable comes down, the cash goes up. One asset up, one asset down. On my books, my cash goes down and my payable goes down. My asset goes down and my liability goes down, and I stay in balance. Because if I don't have my fundamental accounting equation in balance, we don't need to teach the rest of this course. I got to be in balance every day of the week. So if my liability, my accounts payable goes down, either another liability goes up, equity goes up, or an asset goes down. So in this case, I will be having my AP down. I pay the bill, my cash goes down. As the seller, as the law firm, my cash goes up, my accounts receivable goes down. Should be an AR, not a QR. It's not a new word I'm creating. So you say, oh, the only way I stay in balance is if one asset goes up and one asset goes down. That's my receivables being paid. Nowhere is that affecting my income statement. I already took care of the income statement when I generated the receivable and the revenue. At that point, the original transaction, I had accounts receivable up, and I had sales up, which means or translates to retained earnings up. So my receivables went up and my retained earnings went up. I'm in balance. My assets went up and my equity went up. Here, my cash went up, my receivable went down. One asset up, one asset down. I buy inventory. One asset up, one asset down. I buy a house or a building for cash. One asset up, one asset down. I buy a building with a mortgage. Oh, well, one asset goes up, my building, but my mortgage payable is a liability. So my liability goes up and my asset goes up. My accounting equation is still in sync. Excuse me. We stay consistent. Does that make sense? I'm going to take a show of hands. See how many of us have. Go ahead and clear this. Stop the share. And quick show of hands. How many are finding this helpful? How many are finding more confusing? Anybody considering going for a master's in education instead of an MBA? Okay, I appreciate the honesty on there. Thank you both. By the way, I got the MBA followed by the Master's in Education. So they're both good degrees, but then I got the doctorate in business. All right. Other questions you have? It sounds like overall this was helpful. That's why we're here. Officially it's 7 o'clock. I know Dr. K doesn't have class tonight, so I'll stay here as long as you want me. I'll go through some other problems. I'll go through some other exercises. I'm at your service. I'm at your disposal. But I do commit to say we're on time. Exactly 7 o'clock. We've been here exactly 1 hour. Some of you came early, so you've been here over an hour. I appreciate it. Other comments or questions? Anything else you want to take a look at, review? Any other problems on module 2 you've been looking at? By the way, if there's some other problems, I can record a video for any of those problems saying, I'm, number 10, I'm just befuddled. And I don't really, I don't have time to schedule it, but can you do a review for me? And I'll make a video. I'll post it, make it accessible, let you know it's there. So if you have problems or questions on exercises, you don't need to be frustrated. You're frustrated enough in accounting, and I get that. But you do need to learn it, but you will be tested. And again, you'll use this in the rest of your business career. And you'll probably use it personally. You may want to do investments. You say, oh, should I get this stock? Let me look at their fundamentals. Let me look at their financials. Let me see if I can project how they're going to do based on my gut feel. Anything else anybody wants to talk about?
I do have a question for you,
Please.
Dr. Bell. It's back to homework 1. I'm just trying to understand. Where is this? Find the question here for you.
I guess Dr. K is teaching tonight. I thought she wasn't going to teach tonight.
It's on question.
So, okay, I'll jump over to chapter 1. Let's go over there. Take a look.
The one with the graphs. I believe it's at the end, question 14 or 15.
Let's go to module 1 homework. Homework 2.
Apologize in advance with my mic open. You hear a screaming child.
16, data visualization. Is that
So
familiar?
my question is, I'm trying to scroll down on your screen like it's mine. At the bottom, the middle graph, there you go, B, the middle graphic.
Okay.
No, the question starts with the middle graphic.
Okay. Question starts with the middle graphic, which is question B. Okay. The middle graphic shows income statement data. Thermo Fisher, nice local company. Market cap, they have the company stock each year. 2009 to 2017. Revenue roughly doubled. 10 billion, from 10 billion to 20 billion, 20,000 million. What was the growth in net income over the period? Compute the net income growth as a percentage. Round answer to 1 decimal place. Okay, so we're looking at net income growth. From 2010 to
2009 to 2017.
Okay, 2009 to 2017.
So I can give you the numbers if you want it without looking.
Okay. So if you look at 2009, saying, okay, where's our revenues? We have these numbers up here. All right. And when you click on them, that's one of the on data visualization. So the formula you need to use, and we'll do that trend. Trend analysis is taking the, I'm going to type it, and we'll fill in the numbers. So we go from prior year, PY, current year, call it CY. So let me ask you a question. If I said my sales went from $10 million to $12 million. What percentage increase would that be? First of all, how big an increase was it?
Well, it's $2 million increase.
$2 million. That's going to be a numerator. Now I'm going to divide by either the 10 or the 12.
Well, you're going to go by your origin year.
Yep, the original year. So there's my 10 million. And what's the increase? It's 2 out of 10 in percentage?
20%.
20%. Okay. So the formula that we need to worry about is current year minus prior year divided by prior year or base year. I'll use prior, but it could be the base. So that's how you calculate the percentage change. So you're going to take 2009, which is here, which is 10 something billion. That's the previous number, the base year. And you're going to take 2017, which is like 20 billion. You get that 20 billion minus the 10 billion divided by the 10 billion.
161.7.
Basically double, 100% increase. Actually,
If you click the blue link, it'll take you to like the Excel spreadsheet where you can actually get the
thank you.
the numbers for that graph.
Good. Appreciate that. All right. So there we have. So we're looking at this 2009. Revenue was 10,109. You got the numbers. 2017. Revenue was 2918. So we got 2918. Minus, what was the other one? 10.
I thought we were looking at net income.
Oh, is it net income we're analyzing? My fault. Let's try that again. Net income. 1035.
No, you're in 2010.
Okay, thank you. Keep me honest. Good, good, good. 850.3. 2017, 2225. So we got 2225. 850.3. Divided by the base year of 850.3. You can do the numbers as well as I can. So it looks like we've got 1,400 divided by 850, so 150%. Roughly. Is that the numbers we're getting?
Close enough, yeah. 161 something.
Yeah. Okay. Is that making sense? Well, and I'll tell you the reason I've assigned these visualization. There was a section on big data, and actually I'm going to bring that to your attention right now because big data is big news. I pulled up a PowerPoint. I'm going to share that as well because I think it's pertinent to our conversation. We've got PowerPoint. There we go. I'm going to clear the annotation. So when we're doing data analytics, and I think we mentioned, Dr. Hari mentioned Tableau, Power BI, Microsoft Power BI as some of the tools. And then they're saying, well, we're not going to use those, we're just going to use Excel and do analysis. You can compress a whole bunch of volume of data into a couple of graphs, like those 3 charts, those 3 graphs. There's a lot of data on there. So the whole point is that we're getting to an environment where information overload is pretty prevalent. When we did our Walmart analysis, You know, well, they had $560 billion in revenues and $32 billion in net income. The billions didn't mean anything. It was so much easier to look at 2.4% net income percentage on 100% revenues. That tells the story. That gives us better data, because then we can look at Target and say, well, Target also has not quite 560 billion, but maybe $380 billion, and their net income is only 22 billion. And you start looking, saying you're blinded by billions. But if you can look and say, well, Target's not 2.4%, but they're 3.8%. So bottom line, these can be doing better than Walmart or Belk or Kohl's. So if you're analyzing other companies, which we'll be doing by the end of the semester, you're going to be looking at this vertical analysis, this net income percentage stuff. So we're looking at data, 4 types of analytics: descriptive, diagnostic, predictive, and prescriptive going forward. So descriptive, here's what happens. Here's where we're at. Then we're going to analyze the why. And our first discussion point talked about why. Then we're trying to project. Well, here's the trend that we have going in sales. That's kind of cool. Can we predict, and will it be consistent? Or in expenses, or in our raw materials, or in inventory, or in any of the other numbers that show up on our financial statements. And once we have an understanding of the relationships, oh, let's make some decisions. Let's get a prescription, like a doctor's prescription. So that's what's going on there. And again, I did want to share that with you on the data analytics front, because data analytics is big news and growing news. And that's something that you want to be aware of. I think I told you I became blue and gold officer for the Naval Academy this summer. They actually have a data analysis, data analytics program as one of their majors as an undergrad. And that's, again, a big and growing field. We have students that have graduated Francis Marion that are at McLeod, and they're doing analysis based on big data and sharing that to the C-suite, chief executive officer, chief financial officer, chief information officer, doing analysis to see and project. So that's kind of the tools that are being used actively in industry today and things you want to be aware of. Christopher, does that address your question on the analysis on the problem and the module 1 homework?
Yes, sir. Sorry, it took me a minute to register.
Okay. Takes me a minute some nights too, don't you worry. Wednesday night, over the hump night, we're good. Anything else in your minds? Was it worthwhile being here?
Always.
Oh, I like that. Great answer. Thank you. Glad to have you. Again, if there are other questions, I'm going to go ahead and I'm going to I'm going to turn off the recording.